The cryptocurrency markets are going absolutely bonkers, and that is because Biden's crypto executive order was leaked last night by the US Treasury. I do believe that this is going to be bullish short term for crypto, but on the macro scale, long term, it's not going to be. Let me explain why. So last night after the Biden crypto executive order leak, the cryptocurrency markets saw $130 billion injected overnight. And it's totally understandable. There was so much fear, uncertainty, confusion about what Biden was going to do with cryptocurrency because he was talking about issuing an executive order multiple times. And here's the official statement from the Secretary of Treasury, Janet Yellen. This document was leaked last night on March 8th, and it's currently March 9th. I do have to add, this is absolutely funny that these regulatory bodies are supposed to stop price manipulation, which with this leak, it actually did manipulate price of Bitcoin. As Bitcoin pumped all the way up to approximately $42,000 and we broke above the trend line again. This trend line was drawn at the top of $69,000. We did have a breakout down below about a week or so ago, but then we had a retracement. And of course, this executive order news was a nothing burger, and that's why price pumped. People got excited. But again, I'm still going to proceed with caution because I do want to see that break above $42,000, which is also where the EMA 21 is. But anyways, let's get back to regulation because this is super important. And we're also going to talk about other countries that have included regulation, which is really causing the whole entire market to be immensely bullish. In addition to the US releasing positive crypto executive order, it looks like Dubai just established the Dubai Virtual Assets Regulatory Authority. Over here under the Dubai Virtual Asset Authority task, they basically want to focus on trading and issuing of virtual assets or virtual tokens, organizing or authorizing service providers for these tokens, and then having very high standards for consumer protection, which is pretty normal and fair. And of course, that last segment over there, KYC, because that's all they really care about, in addition to protecting and lining their own pockets. This is known for every single country globally. So with the Biden executive order, they are not fully regulating crypto yet. They're going to be creating a work group or a focus group to kind of educate themselves about crypto, which is kind of BS because they should have been doing this anyways. And I know for a fact under the NIST program, they have been studying Bitcoin and cryptocurrency. I covered this a year or so ago. But the US government wants to focus on consumer and investor protection, so more laws and regulations from the SEC because they don't think we're capable enough to make our own decisions. Financial inclusion, responsible innovation, and global financial leadership combating illicit financial activity. Oh my. So basically what they're going to do is they're going to integrate a lot of different agencies to oversee all these things. And of course, focus on a CBDC, stablecoins, because they undermine the US dollar. So now that we found out that Biden's executive order wasn't super scary, let's talk about the pros and the cons. All right, pros and cons of Biden's executive order. Short term, the pro is going to be that it was a complete nothing burger. We knew that regulation was coming. We know the SEC are going to get involved. The FDIC people, big banks, big government, public servants, etc. We know a stablecoin's coming. And realistically, this executive order is just a research group that is going to help the president and government bodies make educated decisions when it comes to regulation. So it's super important we let our voices be heard regarding this. So the markets responded in a very positive aspect, which, was great. But the long-term effects of President Biden's executive order could potentially be detrimental. And I'm not here to cause FUD. I'm not here to cause issues. I simply want to give my opinion. A lot of you guys are not going to like my negative opinion for the long term regarding Biden's executive order. Number one, they're hitting heavy on stablecoins. So even though USDC and Tether are heavily regulated, they have transparent auditing reports, etc. And Tether was actually audited and passed NYAG investigation, etc. But our stablecoins are going to be hit super hard. And the reason why stablecoins are going to be hit is because they pose a threat to the US dollar. And the United States is going to implement their own CBDC. And in doing so, it's going to be a lot different than the stable coins we're used to. They're not going to be transparent. There's going to be all kinds of really bizarre stuff coming out of this. So that's going to be bearish long term. Also with stable coins, please understand these passive income platforms like FTX US, Voyager, Celsius, BlockFi, Gemini, whatever it is, these passive income platforms are going to go away. They will still remain, but the services that they provide, the APY back, the APR back, whatever it is, those will go away because that 10% that you're earning back on your stablecoin is going to directly compete with the bank's 0.0 to 0.03% interest on the savings accounts. They don't want that because every American would remove their money, put it into these stablecoins, and earn that passive income. It makes sense mathematically. Why wouldn't you want to do that? So I'm actually expecting a lot of these platforms to go away. And one of the reasons why I know they're going to go away is because we saw BlockFi get hit and some of these other companies. Nexo too. Next point is going to be whether these cryptocurrencies are securities or not. The only two cryptocurrencies that are not deemed securities are Bitcoin and Ethereum. This is why we're seeing the issue with Ripple and XRP. In the beginning, SEC said, no, you're not a security. Now they're saying they are. You can expect this with a lot of your favorite projects. If an issue gets ordered by the SEC that a project has to go under investigation or is fined, it will cause FUD in the market. Means number go down. DeFi, how is DeFi going to be regulated? It's going to be really complicated to do so, but it will be regulated, and there will also be serious fines associated with this, in my personal opinion. Even though regulation is going to be good because we're going to get a blanket as to what we can and can't do with crypto, long term, I don't think it's going to be good. I'm expecting a massive run up, then dump it. And after we have that nasty drop, I think that's when we will really experience a true bear market. However, that can also be debatable because a lot of the adoption that we've seen in 2022 is completely different than 2017. Either way, I am confident that a lot of altcoins will go away, and that's why I advocate for you guys to take profit heavily. So in short, Biden's executive order, short term was a bullish thing. Long term, we're going to have a fight ahead of us. So I challenge all of you to continue to stay diligent, form opinions on your own, look at different media sources, and speak out to the SEC, speak out to this president, speak out to all of the public servants, and let them know what you want done. Remember, these are your public servants and you are in control. Okay, bye, babes.